on the cards to be taken today. We're also going to be making sure we can review our news, see what economic news is happening today that may affect our trading. Okay. And we want to make sure that we are very tight on our risk management. There's some Canadian news today. There's some USD news, but medium. But all of these data points, Alan would have you know, are important. Okay. So let's have a quick look at our GBP USD and see what's happening with it. Okay. I'm going to zoom all the way out my GU. We're going to zoom all the way out of our GU. And at the moment, I'm going to make this a little bit thicker, this line here. And we're wondering whether or not GU is ready to turn around or whether it's going to be stubborn and break outside of the range, okay? This is, we can see in a premium, this white line here is a premium area. So it's not just a line. You know, as well as I know, it's an area, all right? It's an area of premium where prices are very, very expensive. And we're hoping to see the market trying to trade towards the discount, okay? Trying to trade towards the discount, but we're right up against that area at the moment. Let me get rid of this. We're right up against that area at the moment, and we are trading within this box, but I want to get rid of, I'm going to fade it out a little bit, and let's give it a little border. We'll give it an orange border. We'll fade out the middle. There you go, gone. All right. So we're in this range at the moment. So the market's come up here, made this high, broken structure over here, and made this little, relatively equal to slightly lower high, but we had a reaction from there that started breaking structure. Okay, we had a reaction to from this. So the lower high started breaking structure. Look at it in a 4-hour time frame, breaking structure, making lower low, making lower high, making lower low, making lower high. I'd like to see a lower low. You know, I would like to see this market coming down here, and this is my target, making a lower low at this point. Because we're in a premium, coming from this premium area, and in this range that this market's been trading down within, you know, we're in a premium kind of area here also. All right. Now, if we was to look at it from a daily perspective, we can see that the market pushed up into this level. There was a daily imbalance here. Have a look. You see this imbalance, this gap in between this candle and this candle. There was a daily imbalance that the market has now closed that imbalance. That imbalance has been closed. And I would really like to see this market deciding to go this way and playing ball. All right, let's go down, drop to our 4-hour time frame. As you can see, the market was breaking structure, boom. Retracement, broke some structure. Retracement, I'd like to see it pushing down bearishly, okay? I do have some little lines in here drawn. Let me get rid of this one. You know, like so, kind of area. At the moment, the market's pushed over here, so ultimately, I would have to change the angle. But the market hasn't fully turned around yet, though I would like it to. You know, I want to take this trade from this premium area over here. Remember, all of my channels are always absolutely parallel. I don't never have one channel a different angle to another. But I'd like to see this market pushing down here now, battering through this lower low and pushing down into lower areas. So just about being able to catch it. Let's have a look on an hour time frame. On an hour, we can see this market made some higher highs, higher lows, higher highs. You know, all the way up into this last little higher high over here, this wick above where my mouse is. Let me get rid of these. Get rid of that one, get rid of that one. All right. I'll even get rid of this one. All right. And we can see that this market is currently over here in this premium, even within this red range, coming from a premium. Okay. If I go down to my 15-minute time frame, I'm looking at some 15-minute structure. So here we can see 15-minute structure has been broken. Some over here has been broken, and the market's made a retracement, wicked up into these levels. There is still a bit of imbalance in here left that hasn't been closed on a 15-minute time frame. It's here, hasn't been closed, so that's a concern. Whilst we haven't closed down below, that is a concern. The market might decide, let me even mark it. The market might decide to go back up into that area. 40 minutes, 15 minutes, all right? and close up the imbalance. Okay, there was a smaller imbalance before in here, but the market's closed that up. But we haven't got a closure back down below here for a 15-minute indication, correction, and continuation. At the moment, the market's in this corrective phase. On a 5-minute time frame, have a look. We did break some structure from here, coming down here, indicated, corrected, continued, and then the market pushed down, and then it's now making that correction more on a larger 15-minute kind of zone. Okay, so at the moment, you know, we're here, and ultimately I'd like to see this market come and get a close below here. I'm not going to sit here, my mouth open, and watch it all morning, but I am going to put up an alert. I've already got an alert on this line here. Can you see? How did I do that? I right clicked the line and I clicked alert, right click, edit horizontal alert. It's edit because I've already got an alert on it. I'm also going to put an alert up in this level here. I'm just going to put an alert up in here because that's where the other imbalance is. All right, telling me if the market's kicking back into here, or if the market's ready to turn around. Okay, so that's our first look at GU. I want to be in GU for the sell. Okay, now whether or not GU is going to do something silly and it's going to start wants to come and capture more liquidity above these levels, I don't know. All right, I do not know. However, that's not what I'm expecting. I'm expecting to see it breaking down. Why? Premium level over here, and I might this trend decide to load. Let me look at gold. Taking when we're looking at gold here, you see my outlook for gold is let's zoom all the way out. In fact, I tell you what, let's wipe our charts completely clean and start again with gold. All right, so our charts are clean and we are looking at gold. All right, so I'm going to zoom all the way out on my weekly chart and let's have a look at gold. Now we know gold has been bearish. We know this, all right, because gold's a safe haven asset, and we've seen gold, you know, really be pushing up, making higher highs and higher lows. All right. If we drop down to we could put a top end in if we wanted to, like so. I could put a top end in like that if I wanted to. All right. We can see this current little impulse that the market's been in, and even the last one. We can put in ranges for those as well. Okay. We see from here, touching the last low, swing low before the highest point. Now we could put in a range in here also. Let's go down to our daily time frame. Okay, so on our daily time frame, we can see that the market is trading within a range. All right, I hope you can all see this. The market is trading within this little range, this little box in here. I'm gonna make this box just have an orange border and nothing else. All right, like so. Okay, so we're in this box, but within this box, we have been making some lower lows and some lower highs, like so. Okay, we have been making some lower lows and some lower highs, and it'd be nice if we're thinking to ourselves, there's two scenarios. Have a look at the scenarios. The question: have we pinged, ponged, pinged, and now we're gonna pong? Yeah. Or is this market is not going to pong? So it's either this scenario, or is this market pinged, made a high, made some lower highs and some lower lows on the basis that the market is going to break out and try and get down to here. That is our GU. Let's have a quick look at our GU. For those of you who was looking at GU also, looking to get in, is pushing down, which is good. I want to see it push down. I want to see it break in this level. Let me add an alert on this wick here, because this wick happened after the fact. I want an alert when it's crossing down. Okay, I want to see this market crossing down and keep pushing down. Let's go back to gold. Right, so it's, you know, which one of these two is gold doing is the question, and we don't know. Is it going to do this one and it wants to push out and at least get back down to this level in here, maybe down to this structure, down to that structure, or beyond? Oh yeah, or beyond, you know, in here, or beyond. Okay, or is this market going to continue doing some push-ups? All right, so let's have a look at it. Like I said, if we was to draw in a range, and I'm going to use this line here, I'm going to make it green. Let me touch this down a little bit. All right, and we used to make it green. I'm going to make it solid. And we could put in a top end, maybe like this, meaning that we're at this top end right now. Maybe we're trying to push down to this green line. Okay, maybe. We are kind of in the middle of a bigger range, which is this range and this range. How did I draw that? Took the bottom data points, made a parallel line to this top point here. And we're kind of in the middle of that range, which is a bit meh. That's why I'm saying I don't know whether this market might want to do this. Yeah, my gut goes with the market wants to do this. However, on a smaller time frame, there is a very large imbalance that's been left on gold that may need filling first. Have a look at it. All right, let's go down to our 8 hour. All right, so can you see them? This market made a big imbalance here. See this big, all these red candles was a big imbalance. The market came. Let's have a look at some technicals. The market came, pushed all the way back 50% into that imbalance here. All right, the market made another big imbalance below here. The market pushed all the way back in and closed the imbalance. All right, so let's mostly look at it closing the imbalance. This one closed the imbalance, and I say 50%, it closed the imbalance enough. There's a little bit left, but it came up here and closed the imbalance. This one closed the imbalance all the way up in here. Then we had another little push. So let's look at that last little push, which created some imbalance. Let's get rid of this. And trust me, guys, those imbalances, those levels are big in regards to pips. All right. So we're talking from here to here. This market, you know, is this market going to get up to at least 50% of this imbalance, or is it going to close it completely? All right. So this is what I was thinking to myself that this market wants to do. This is what I said the other day, and I'm still sticking with it, even though the market has been doing a bit of the hokey cokey. All right. That I think that this market may want to push up into these levels, even if it wants to come down. All right. So in my opinion, trying to see a breaking structure for the buy, if I've got it wrong and this market really is just doing ping pong between here, ping, pong, ping, and it wants to pong, well, getting in for the buy is a good idea. If it's not doing that and it just wants to push up to 50% of this level, well, getting in the buy is a good idea. All right. And then when it gets up into these levels, you take your profit, move your stop, and see whether you're going to get break of structure if it's pushing down. Okay. Like I said to you, my gut is that the market wants to come up in here first and then push down back into these levels and potentially break this level. However, I understand that the market is holding off from gold as they wait to see what happens. I saw a little alert come up saying something about gold, and you know the market's waiting to see what's going on with the gold scenario. All right, so let's just drop our time frame down further and look at it in a 4 hour. So on a 4 hour, if we were to draw some lines, there'll be a line looking like, you know, like this. All right, and potentially even touching this last structure in here. Okay, we saw the markets run through there very quickly on a 4 hour breaking structure. On a 1 hour, we've seen how the markets broke right down here, breaking structure. And I'm just expecting that right now, if I was to draw a line in, I'd touch in some of these data points over here. Whoops, I can get rid of that one. Touching some of these data points of this little retracement, we could be seeing a bearish flag. I agree, but I just don't think that flag's finished quite as yet. All right, so I'm just touching these first 2 data points and even the third data point in here, and I'm going to make this like so and put that on the top here. You know, I'm actually thinking that this market, you know, maybe doing something like this to do this, yeah, and then maybe to eventually do that. Even if it decides that after the ABC maybe wants to do another little push first. but I'm expecting to see that maybe before this market does this. All right. So whether this is going to be a bit more elongated or whatever it may be, who knows? So at the moment, therefore, we're in a discounted area of a potential retracement, in my opinion, pushing up towards these levels. That's my synopsis. That's my summary of what's going on. So at the moment, you can see how the market's coming down here, making some lower lows and some lower highs. That would have to be my line, taking into consideration this lowest point here, this highest point before this lowest point here. Therefore, this market is in here, trading within this little range in here. If I drop down to my 5-minute time frame, we can see how the market is doing hokey cokey. Higher high over here, coming all the way down here, over here, just doing the hokey cokey. I'm not gonna lie to you. All right. Do I really want to get really involved in this little energy in here? Not really. Okay. Not really. If you really want to, not miss it and you're trying to catch it, every time you get into a real discount in here, you can wait for a break of structure. Unfortunately, the small, that might be on a 1-minute time frame, or like I said, if it's on 5-minute time frame, you will be safer. But I'd say stay on a 5-minute time frame, because then by the time you get that breaker structure in here, you should be breaking outside of this box. Okay, it's just your risk to reward. On a 1-minute time frame, you can do the same thing. What do I mean? Have a look at it previously. Previously, the market is coming down from here. This is how you draw your line. Why would you draw your line like that? You're touching the last high before these lowest points in here. And you can see at a few different points here, this market, broke the structure, corrected, continued. You could have placed your stop below here. But as soon as because you're still in this range, and because if you start trickling up towards the middle of this range, I would advise you either do not take a trade from here, or if you do, as soon as possible, you protect yourself, because you just don't know what this market's doing in here. In here, it's consolidating, and it's not consolidating nicely. It's kind of having a little fart, a little muck about. It's going to the top here, then the bottom, and then it's kind of, I'm kind of in the middle, and then it's going to come down here, or coming back here. So this whole area is a bit marshy. It's a bit marshland. It's a bit quicksandy. All right. So you want to really get involved when this market gets at the top in here, breaking out or making a reversal. Okay. Or, really at an extreme over here when the market is breaking out or making a reversal. That's my conclusion of gold. I don't really want to get involved before that. I've been involved in some smaller breaks of structure. All that happens is that you're in profit for a little while, and then it's going to kick back on you because the market's not really decided what it wants to do. All right. Let's go look at something else. Look at EJ. So again, we will zoom all the way out of EJ, okay, so you guys can understand. Dollar tempered by threat of Japan intervention. Yen is fragile. So we've got just come up here 6 minutes ago from Reuters, however you want to describe that. So we'll look at EJ, but we'll also look at UJ. All right, or should we just look straight at UJ? I think we're gonna do. We can look at UJ straight away. Yeah, USD JPY. Okay, and let's have a look at it. All right, so I'm going to delete everything off this chart. Pow. We're going to zoom all the way out. Pow. All right, we want to get a picture of it, especially this is something that we don't trade regularly. We want to get a nice outlook of what this market is doing. All right, so when we do this, we can see a range like so. When we do this, we can see that we're near the top of that range in the premium. Okay, we can see how this market is pushing up like so. Obviously, as I zoom in, this is going to be more accurate, but I am drawing this based upon a monthly chart. Okay, when I drop down, we're on a daily, and I could draw those lines better. But for now, for argument's sake, like this doesn't have to be all the way from here. All right, but it is touching some data points. It's touching some data points. I'm going to make it a bit tighter, like so. And as a top end, we could go, this is the top end over here. And we could also have the market narrowed up. And this is the top end. Can you see? This little range in here. So right now, we're coming, let me make this a thicker pixel so you can see. All right. So we are here up in a premium. If I was to draw another line in here, taking into consideration this market structure, these higher highs and higher lows and higher highs and higher lows and higher highs, this other line would look like this. Have a look down here. It would be looking like this, okay, like so, okay, and the top end, like so, okay. And even if we was to do from another line, it'd be in here to here, okay? Here to here on the basis that that is the highest point over here, therefore touching some structure in here. So let me drop this down, we change the color, let's zoom in. We can see how that market, maybe that was some news. This was just some news, some manipulation, whether maybe the market came all the way up to this highest point over here, all right? And therefore, all of this energy here is trading within that box, from that high to this low. So right now we're up in a premium of that box, in my opinion, here. So if we was to draw some lines like so, we're in a premium of that box. So I'm very interested, if I zoom in also, to see that market, that price start to break outside of that market, meaning breaking outside of that blue little channel. All right, start breaking down here, breaking some structure. Okay, if I was to draw some lines in, structure is the market is trading within this little box at the moment. All right, so therefore structure, you know, is the market breaking down and doing some stuff. Okay, it's a bit difficult here, it's a bit noisy. You know, this would be a level, this would be an ugly little level as well. Okay, so I want to see the market on a 4-hour time frame breaking this structure. If I drop my time frame down, go to my 1 hour, we can see that we did have this huge wick coming down here. Now we know that last time the Japanese started to do anything, started to think about doing anything, we was getting these whipsaws, these spikes that kept spiking. Yeah, we was getting them. They kept spiking, they kept spiking, they kept spiking. Here's one of them. Yeah, as the market spikes down here, then pushed all the way back up in here, and then it's decided to keep coming down here. So this starts complicating things, these spikes. I'd like to ignore them. All right, I'm not gonna lie to you. I'd like to ignore them because they're so erratic. So on our time frame, to draw some lines in, that line would be potentially from, you know, some of this structure down here, pushing up like so in here, and you'd have some minor structure in here, in here. All right, we see the markets push down here and maintaining lower highs, lower highs, lower highs, and making some lower lows, lower lows. I'd like to see this market breaking outside of this range, this blue range, okay, and breaking some structure. This wick is annoying, but I'm gonna ignore it. Okay, I'm gonna ignore it. So right now, on the 1 hour time frame, we haven't got a closure below these levels. All right, below this level, because I'm ignoring this wick. Okay. Why am I ignoring the wick? Because I think it's random. That's why. I think it's random. Now, if we don't want to ignore the wick, fine. We're waiting for a closure below here. All right, but this is quite a lot of distance between here and here. So I'm just ignoring it and looking at this level in here. All right, so this is an indication. This is a correction. I'm waiting for a closure below here, which means a closure below this wick on a 1 hour time frame. On a 15-minute time frame, similar. Still waiting for a closure below that wick. Okay, as we can see how this market is making nice structure, making these lower lows, lower highs, sorry, like so. Okay.
So Jay,
Yo,
we don't include the wick on the imbalances, or not?
no, we do. We 100% do include the wicks on the imbalances. We do. It's just that, you see, for me, we do include the wicks on the imbalances. This market came and closed up some of this imbalance in here, but this here, I think, was driven. Like, I'm expecting after this wick to come here, to start seeing lower highs, which we have done. We have seen these lower highs. So it came down in here, closed this imbalance. Buyers came back in and pushed it all the way back up in here. I just think that this wick, which is huge, is
an anomaly, man.
It's an anomaly. All right. So you can take it into consideration. That's fine, which I said. Then you're waiting for closures below here. You want for this market to start breaking outside of this blue range and breaking this structure and doing this for sure. 100%. That is the way, you know, that is the patient answer. Yes. Okay.
All right.
So, but if I start seeing this market breaking out of here and breaking structure nicely in here, and I get a good indicator, remember this, I'm still in the hour time frame. I could choose to get into this trade, manage my risk, placing my stop above the last swing high on the basis that this anomaly has, paved the way. If I want to see this, I want to see this wick on a smaller time frame. So I'm looking at it from an hour. I want to look inside of it. All right. So let me drop to my 15-minute time frame. It's still just a wick in here. Let's go to my 5-minute time frame. It's a couple little candles, but still a bit wicky. I'm gonna go all in my 1-minute time frame and have a look at it. I'm investigating that push. So like I said to you, from here, this market, something happened. All right, and let me show you a little flex. Right click, settings, economic events, take off only future events. Click OK. One day maybe it doesn't show you on a smaller time frame, but here, can you see these little things here? These little bubbles that pop up. Those are news events. Okay, so when you click them, you'll be able to see news events. All right, see red folder news events, red folder news events. Now I was wondering whether I was going to see a red folder news event before this spike or at this spike, which I haven't. There isn't one there, which leads me to believe that this wick was driven by something that wasn't a scheduled event. It's probably driven by this, news or something that's come out in the news, not a scheduled
intervention, brother. Intervention
about the intervention. So that's just what I was about to say.
See.
Something that was not scheduled. See, have a look here. How you can see some schedule. Look at this scheduled event here, and we can see the market's reaction here. We can see some. Whenever we see the scheduled event here, something was going on over here. Look. Retail sales, red folder, and we can see how the market had a reaction in those levels, as well as that more times out of 10 they're at market open as well. Okay, but the point I'm making to you is I was just doing my research and looking to see whether here there was also some sort of scheduled event, because this isn't necessarily markets open around here. This is 11 o'clock, 10:30, 11 o'clock. Let's have a look at this spike. This spike was closer to markets open, around 2 o'clock. So EJ is a little bit more complex at the moment because of these interventions that Alan has spoken to us about. Personally, if I'm going to trade it, you're either going to trade it and take it into consideration, meaning you got a long way for this market to move before you break outside of this wick. But I remember last time there was lots of these wicks happening. Every so often some little wick just wiping out traders. So in my opinion, if you ever do get into a situation where you're in EJ and you're part of this, I think last time I was part of a big wick push. If you do and you see it pushing and breaking structure, take your money or secure your position, because it seems to just wick and then wick back up. Look, if I drop my time frame all the way down to 1 minute and look at that big wick, the bigger one. Look, this 1, 2, 3, you might as well say in the space of 5 minutes, this market moved 85 pips. In the space of 5 minutes, maybe in the space of 20 minutes or so, if I measure it out, the market moved 160, 170 pips, because look, in the space of, that's 13 minutes, let's go all the way over here, space of half an hour, 32 minutes, that market's moved 85 pips in one direction and about 60, 70 pips in the opposite direction. Do you get what I'm saying? So if you do get yourself involved in here and you see you're in a trade and your trading goes for 50 pips, please do not believe that in this market it's going to do this and keep doing this. Because at the moment it's not doing that. It's just having these spikes. And if you do get involved, be over the moon and take your money. Because the market seems to be, it's like I said to you, it's a little bit volatile at the moment. Because look, it did that spike and then it came back into the track. This is the reason why I said that I'm going to ignore it, because this track that we've drawn over here is valid, still seems to be valid. The market's in here, spikes out of it, comes back in it, respects it. Like it's still in this kind of little track. Remember this track, how I've drawn this track is a parallel line from the top end. This parallel line from the top end, I've just pulled it out into a general energy. That general energy that I've pulled it out is touching, actually how I've marked, is touching this general, range of the market. Okay. This spike I've ignored because I just think to myself, especially if I get out of the 1 minute, it just looks strange. It looks like it's not supposed to be there. All right. But like I said, we trade what we see regardless. Okay. So what we see is we see indication, correction, continuation from a premium. That's what we trade. Let's have a quick look at gold. Like I said, gold's ramping. So is GU. I think the markets are waiting on stuff. All right.
Thanks for the explanation, man.
Thanks, bro. So if you can let's have a look at which should be gold if this can move out of the way. No, it's not gold. None of them are gold. Let's have a look over here. So gold, remember what we said here? What we said we're going to watch this and see what this market does. The market could decide, this is gold, it could decide that it wanted to push up into this imbalance here that exists here. Have a look on a 4-hour time frame. Huge imbalance sitting in here. However, the market could decide that it actually just wants to, if we're ping-ponging, ping, pong, is the market ready to do this and get down to the other side of this range? I don't know. Is the market at least trying to get into the bottom of this orange box? Well, it has already, in my opinion, by coming down here. So it's either going in this direction to get back to the top, or it's had enough of going to the top and it's trading within this white range and potentially we're going to get here. This is what I believe the market wants to do. I'm just not sure whether or not some volatility, something is going to make the market push up first into these levels and then go here. Yeah, that's what I said earlier, but I deleted out these paths. All right. So therefore, in my opinion, if you want to trade this market, you are in a premium-ish. Here's the premium level. We're moving down, coming more towards the middle of the range. And it's just about reading and reacting. So if I go to my hour time frame, have a look on gold. I haven't got any clear indication, correction, continuation. Maybe this is some 1 hour structure in here. It's not beautiful. Maybe this is an indication pushing in here. Maybe this is some correction energy. I haven't got the continuation yet closing outside of here. If I do, then maybe you could take that trade like that. With your stop, the most aggressive entry would be with your stop above those highs. If I drop my time frame down to a 50-minute time frame, it gets a bit more clarity and we can see how this market's been trading within this range. Yeah, and for that purpose, unless you're going to place your stop all the way above here, you can't place your stop above this high because you again, in my opinion, should wait for an indication, correction, continuation, because the market's coming down here. Look, push down here, so it will equal. Like this, it's going to take these lows. These lows are going to go. Yeah, these lows are going to go. But unless you're going to be waiting on if it's an hour close. So therefore, in the next 55 minutes, you get a lovely hour close there. By all means, you can take that trade if it's an hour close. On a 15-minute time frame, in my opinion, can't just take a 15-minute close here because you haven't got a 15-minute indication. On the hour, we have an hour indication. You haven't got a 15-minute indication below these levels. Okay, so I'd like to see, some sort of correction and continuation outside of that red-orange box. On a 5-minute time frame, it's the same. The 5-minute close is here. I'd like to see a correction and continuation, understanding that is going to be my most aggressive and highest risk trade because I might get a 5-minute indication, correction, continuation. But for time wise, is it a 15-minute one? What do I mean by that? I mean, if I get a 15-minute red candle like this, all right, and I don't think everybody has grasped this because somebody asked me a question the other day. And I could clock that they haven't really truly grasped what I'm saying. So look, if I get a 15-minute red candle like this, yeah, nice big 15-minute red candle like so, and someone goes, okay, on a 15-minute time frame, The market broke structure here on a 15-minute time frame, broke the structure, indication, corrected up here, didn't continue, didn't close below here, and actually came up here and wicked and broke above this level. Yeah. So therefore, that 15-minute structure, I'm trying to say that 15-minute is your parameters, goes out the window, because it's not your parameters, because this has violated your 15-minute last high, violated it. So 15 minutes isn't the thing. Yeah. Now, if we go on an hour, from here, we've got some hour structure over here, as ugly as it is, and we've got a closure below here. This could be an hour indication. All of this froth here, we've seen an hour correction coming up to here. And therefore, if we get a closure down here on an hour time frame, where we have then got an hour indication, hour correction, hour closure. But we're not getting a closure for another 52 minutes on an hour. And by that time, who knows? That closure could be down here as an hour. You don't know. All right. But if it was closer to time and you just got a single closure just closed here, you could take that trade placing your stop here, because you're taking into consideration hour high. If I drop to my 15-minute time frame, like I said, you cannot take this closure as the indication, because afterwards it came and it violated that these highs. The structure, this is 15-minute structure, how you can see it here. That's 15-minute structure. So it kind of started fraffing about, showing it doesn't really care about 15 minutes. That's fine. Therefore, if it does indicate here on a 15-minute time frame, I have to wait for now a 15-minute correction and 15-minute closure if I want to take 15-minute structure. I can't just say, oh, look, I've got a 15-minute closure over here. Yeah, but where was the indication? It's no longer a closure. It becomes an indication, because before it violated its own structure. So when that comes down here as a 15-minute time, that becomes an indication. I must wait for this on a 15-minute time frame. Even on a 5-minute time frame, yeah, because look, there's no 5-minute indications. We can say this is structure. We can look down here, the market might have come down here on a 5-minute. Someone's saying, look, Jay, this is a 5-minute indication. Yeah, but then afterwards, it pushed all the way up here and it violated the previous 5-minute high. So at that point in time, 5-minute doesn't have no respect for 5 minutes. Then it came down here, made a higher low, then it made a lower high. 5 minutes doesn't care about it. It's doing whatever it wants. It's consolidating. It's in this range. Even right now, have a look. The market was coming down here. We was wondering whether we can get a nice big candle. The market's pushing back up here. It hasn't broken this structure yet. But to get my point, if we get an hour close, which is in 50 minutes, then that's different. You can just place your stop above the hour high. When you get to 15-minute time frame, the structure for 50 minutes hasn't been respected like this. A couple of times it's done this. So every time it does that, it violates this being an indication, this being a correction, it's violated it. It's violated this high. So therefore, it's like it's not valid no more. You thought this was the indication. You're like, okay, this is a correction. It's not a correction as soon as it violates this high. So therefore, 15 minutes isn't the thing that you're looking for. If it does push out here and you get a lovely 15-minute close, that's fine. Then you need to wait for your correction and your continuation on a 15-minute time frame. It's the same principle on all time frames. If you hear I've got into a trade on a 1-minute time frame or whatever time frame, it's because on a 1 minute it respected its structure, meaning that on the way up it was doing this, and then on the way down on a 1 minute time frame, it indicated, it corrected, it continued. If on the 1 minute time frame it did this, yeah, made its structure lovely, indicated, corrected, violated at top, well, that's no longer an indication now because it's violated where it came from. I'm now waiting again to see what happens, and then it starts doing this. And then it indicates here, breaking this structure here, okay? Breaking this structure here, and then it corrects over here, and I think we're correcting, and I think we're continuing, and it doesn't do that, and it breaks the structure again. I'm not in again. It's vital. I have to reset again, because it's not respecting its own structure. And then we finally get an indication. You see, imagine that we go here, we finally get an indication, and we get a correction, and then we get a continuation. That is the first time in all of that drawing that I've done here that the market's giving you an indication, correction, continuation. Yeah. Now let me say something. On a bigger time frame, if it wasn't the 1 minute, on a 5 minute time frame, you know, you may have just already got a closure below here on the 5 minute, indicating below some 5 minute structure. If on the 5 minute, for argument's sake, this was a lovely 5 minute close over here, and you got a lovely 5 minute close over here, and then the market somehow made a retracement without violating this last structure, boom, and came down here, you could just take a 5 minute when it closes on a 5 minute time frame here, but your stop's gonna have to respect 5 minute high. Your stop can't be respecting 1 minute high, because the 1 minute high could retrace all the way back up into here, stop you out, and then keep going, and it would still be respecting 5 minute highs. Like, understand what I'm saying, and you must get that click. When that structure breaks, that becomes the indication. If it comes back and violates the structure, you can't say, oh, I'm just waiting for a closure for my 5 minute closure. No, because it disrespected the previous 5 minute high. Now you can say I'm waiting for a 15 minute closure, I'm going to get in. Then that has to respect the 15 minute high, and that has to be an indication, correction, continuation without any type of violation that happened in it. That's how you're going to end up placing your stops. And I'll give you an example of that. Another one, final example. All right, so I'm giving you quite a lot of examples. All right, so look, like I said, on an hour time frame, and it's not very clean. That's one reason I don't want to use it. Like on an hour, this is a bit hectic. Yeah, it's a bit messy. All right, but let's say, look, can you see on a line chart? You can see these little valleys. That's structure. Okay, I'm using a line chart, not the candle chart. You can see these valleys. And we can see if we got a 1 hour closure below those valleys, I'm waiting for some retracement that's visible on that time frame, possibly closing up some hour imbalances or whatever it may be. And then I'm waiting for an hour closure, and I'm able to just turn and be like, cool, I've taken this trade based upon hour structure, indicated, corrected, and continued like that. It's never done that in this little push. Look at this little push here. You've never seen an indication, breaking structure, correction, and continuation. It's been making higher highs and higher lows, higher highs, higher lows. So here we've got the first indication, potential correction within all of this fluff here. Let me try and hide this. Yeah, potential correction in here. I'd really like to see it potentially push up further in here. Hence the reason why I was saying to you before, there's some imbalances. There's also this massive one over here. Yeah, and vice versa. Let me show you this. Vice versa, on a bigger picture, have a look. This market has broken 4 hour structure here. Look, broke this structure, but it hasn't continued below this level yet. So it could choose, even though it's made this little 4 hour little strut high here, it could choose to go like that. Yeah. So you haven't got that confirmation as yet on the 4 hour time frame. If somebody asked me and I said I'm in here for this sell, I'm not in here for this on the basis that I've got a 4 hour confirmation. 4 hour confirmation would mean that this candle here comes and closes below this level, and for whatever reason I've chosen to get in this trade either like this or taking into consideration the big imbalance and my stop above here, saying yeah, I'm in for this sell. Yeah, so on a 4 hour time frame I've got no confluence, no confirmations. On a 1 hour time frame, I've got no confirmation. On a 15-minute time frame, I've got, even though I've got breaks of structure happening, I haven't got no confirmations. Because look, this market here, if we're looking at 15 minutes, I've got confirmations, but they was a lot earlier in the day. Yeah, they were over here. We got this is 15-minute structure. Look, we got indication, correction, continuation. I could have got in a trade here, and I would have been in profits. Yeah, but from here, a discount, and the market's going sideways, I'm not going to be in a rush just to hit the button straight away until I see a clean closure below these levels, a lovely correction, and a lovely continuation. You can't see the wicks on the line charts, but below here is the wicks. Yeah? The line chart takes into consideration the bodies, the closures. All right? I hope that makes sense. Like, people say, oh, I don't know what time frame to get in. You can get in any time frame. But if you're looking at the daily time frame, you need to respect the daily structure. If you're turning around and saying, okay, I'm waiting for an indication, correction, and continuation. Let's imagine, argument's sake, it's not very clean here because we're in this range. But let's imagine that if we wasn't in this range, you've got to respect daily structure then. Took it based upon you wait for a daily close. Okay, you got to respect the daily high then. Can't take a daily close and respect 3-minute high. Does that make sense? Because on a daily, the market's going to move on a wave on a daily. That wave's going to come all the way back up in here before it goes down. The 1-minute structure's over here. The 15-minute structure's over here. The hour structure's over here. The 4 hours here. All of this you get stopped out on because you looked at a daily level, yeah, and you place your stop. You know, you have to place your stop on a daily kind of a high also. All right. So, like I said, that's why in an ideal scenario, you want to get a lovely small 5-minute entry, 15-minute entry. That's also near a daily high. You know, if I got a lovely entry in here, for argument's sake, or maybe that's not maybe the best example, but I've got a lovely entry up here, then I'm feeling great. If I wanted to fall asleep on this trade, my stop should be far enough that even if the market does kick back all the way up in here, violating 5-minute structure, violating 15-minute structure, violating hour structure, I'm still supposed to be good because my stop is up here. But that wouldn't be the case if I took this daily structure but took a 5-minute high to put my stop loss. That wouldn't be the case. I'd get stopped out. And when you get stopped out, whether you took a daily trade, 1-minute trade, 5-minute trade, if you're risking the same amount, you still lose the same amount of dough. You're still just as much of a loser. Yeah, you're still just as much of a loser. All right, let's go and have a look at another pair and we finish up. All right, let's go and look at BTC USD on Coinbase. All right. So I can see straight away because the market opened up on a daily chart that this market is trading within a range. This market is doing a hokey cokey in here. And therefore, immediately, this is giving me some information. Immediately, I want to buy in a discount, sell in a premium, or I want to wait to see what the market does if it's going to break outside of this range. Break outside of this range. That's it. That's my outlook. I could draw my ranges in here as the market's trading down, and when I get smaller, I'll have more details and see the lovely market structure. Look at that lovely market structure. Lower lows, lower highs, lower lows, lower highs. I can pull this out, get a bottom end if I really need one. Yeah, like so, touching this lower end here. So right now, maybe there's going to be a little push up in here. Maybe. You know, maybe this is close enough to the discounted area. Isn't that close? I was going to say, if it was close enough to this discounted area, that taking a buy, even if it is just to this top end of the range, might be intelligent because it might not go at the top end of this range and it might push past, especially if the overall bigger market structure has been bullish, you know? All right, now obviously we can try and draw these ranges better. Like so, let's see what that looks like on this, if I zoom in. Yeah, so we can see how price is kind of broken outside of that market over here. Yeah. So, you know, maybe Bitcoin is going to take a bit of a retracement, but right now, I don't really know because we're in the bottom of a consolidation sideways range and we're at the bottom of the impulse. So if anything, like I said to you, maybe there is a short term, if I go and drop my time frame down, maybe there's a short term buy in Bitcoin. You know, where would that short term buy have been? Let me go and look at my line chart. You know, maybe it was in here looking very closely at some really ugly structure in here. And as a market in here, it's here. Whoops. Oopsie, let's go again. In here, in here, in here. Okay. Maybe someone was going to turn around and say there was a, you know, small break of structure in here. Indication, some sort of correction, some sort of continuation. It was so blurry, you could have put your stop all the way below these lows if you wanted to. Like, you know what, I'm just not too sure on the basis of this market's done stuff. Or if he's very aggressive, you can put it below that last low. And if you did, you would have been lucky. 3 quids in, very high risk to reward trade. Okay, as the market pushed up to these heights. All right. if you place your stop below these lows here, you're still in the profits, but it's a lot less reward in that trade so far. But maybe I'd be concerned here. I'd be a little bit concerned here. Yes, we want the market. In fact, maybe you want your market this to get up to at least this pink line. All right. So, you're buying in a discount in a bullish market. Whether we're, right on this discounted area down here, this orange line, well, that's another question. So therefore, it won't necessarily be a 10 for me, but, I'd get it if somebody said to me that's what they was doing. I'd get it. I'd say, okay, I understand why. All right. And you should understand why also. Let me zoom out so you get a better picture. We're coming towards a discounted area of this big orange box. I don't think we're quite there. We've got some distance to travel to say that. Look at it over here. It's up against the curb. Yeah, face to touch, biting the curb over here. So therefore, this market might decide it wants to come back up in here, maybe, or even go sideways, touch our pink line and push down, actually get biting the curb again. Maybe that would be good area if you see breaker structure to buy from. Okay, maybe. Because the market price is breaking outside of this market also, this market is deciding that it wants to start funneling down, and we get this scenario of the market price breaking outside, making a correction, maybe back inside, and then closing, boom, boom, back outside again, giving me an excuse to get in there for the sell on the basis that on the bigger picture, let's have a look at the bigger picture, and maybe Bitcoin is trying to get back down to that pink line. Or if I drew my lines in a bit better, yeah. Maybe that this is trying to get back down to this pink line, which would be a tremendous trade. Okay. However, I might over the moon, can't wait to take it. Blah, 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 blah. Not really. It's okay. It's okay. I'd like to see it do something in regards to actually show its hand in regards to what it wants to do out of this consolidation. All right. If we look left also, well, we have kind of grabbed the liquidity from above here. This did push up above here. It hasn't quite made a higher high. Maybe it's had enough. Maybe it's exhausted and it wants to start coming back down into this discounted area of this pink line. Because remember, this pink line's area is not only that, it's also like that. All right. So, maybe it comes down to this pink line and then starts rallying again, and Bitcoin starts going to some new levels. All right. Who knows? All right. Who knows? But right now, I'd be waiting to see what Bitcoin done at this consolidation. Any questions, guys? Anything somebody wants me to quickly have a look at, or any questions? Any questions? Let's go have a look at our GU, which is stubborn. Go on. Someone's going to say something.
No, I was gonna say I'm just taking it in. No questions right now.
Good. So look, the GU for me is stubborn, guys. Like I said, we're in this range, and it's stubborn. It's pushed down here, made lower low, breaking this structure, but it's pushed all the way back up in here, past the 50% of this impulse, dancing around again, then breaking some more structure, and coming back up into these levels again. Yeah, the market is a little bit stubborn, and it's just about what is going to be that catalyst, in my opinion, that's going to make it, based upon my what I require, my understanding for the market is, or from here, this market being able to break some structure and start making its way bearish. Okay, so that's right now we're sitting in this daily imbalance. Okay, and ultimately, it's just about being able to see it break some significant structure, which at the moment, we've got these higher highs, higher lows, higher highs, higher lows. The market looks like it's still in that energy. Yeah, it looks like it's still in there with this big green candle appearing now on an hour time frame. The market seems as though it's still in that energy. So if you wanted to see structure, the market is still in that energy. So it's not saying anything on a bigger structure to get in for the sell. On a smaller structure, I was in this trade or the smaller time frame and rolled it down to the point where it was up at one point three figures, high three figures, but between that and another trade I had was 4 figures. And it was risk-free with a little bit of profits. But this green candle, whilst I've been trading, has stopped me out for a little bit of profit, which is annoying, but it's not a loss. Okay. And the market is, look, can you see? Once again, it did the same thing, broke some 15-minute structure here, indicated, but now it corrected all the way back up into here. Closed this 15-minute imbalance that we thought maybe was going to be a stopping point, has not continued back down here. So on a 15-minute time frame, your money's still in your pocket. Why? Because you've got an indication, you got a correction, you haven't got a continuation yet. Your money's in your pocket. You see it? And it's good job your money is in your pocket because the market is trading at the moment within this little box. This box is a premium right now. But you haven't got confirmations that it really that structure is really, really strong. But only thing you could do is, if on a smaller time frame, maybe it's not going to be 5. There's not enough information here for 5. But if I just have a look on a 1-minute time frame, which is higher risk, much higher risk, you could be looking for an indication correction continuation to be able to get in from this premium area, i.e. this orange box. Yeah. If the market gives you what you're looking for. So therefore, if right now this closes below here, you might be able to determine and say, you know what, it's a bit higher risk because that market could push up and stop me out. But this is me taking a sell from a premium for 5 pips on the basis that you may be hoping to get back down to this discounted area at the bottom of this orange box and ultimately beyond, if you believe that this market is bearish. If not, this market could decide that it wants to play silly buggers and push up into these levels. Because on a bigger picture, which is where it gets more respect, the bigger picture gets more respect, this was the last swing high. So if we can come all the way down from this mountain top over here, ping, pong, ping, it's allowed to pong all the way, anywhere around this area. Once it doesn't violate this high, it's allowed to pong up there. I don't want it ponging up there. It's allowed to. We might find that it goes and makes an absolute bloody equal high of that last level, and then comes and makes it equal low. Then comes and makes it equal high. This is possible. It's not impossible, I'll tell you that much. It's possible. So right now, though I want it to turn around on my yellow line, my trend line that I drew, like around here, it might not. And then the only things that's going to happen is I'm going to have to change the angle of my trend line. So what do I do? As a day trader, I have to read and react to what the market is doing. Not to what I want it to do, what I'm willing it to do, what I've got my fingers and toes crossed with, what it's actually doing. So right now the market's come up here as a 1-minute time frame. This is the highest point. This is previous structure. It broke that previous structure on a 1-minute time frame, but it's all the way back up into these levels, which might be a deep retracement, but yeah, I can't get too excited. The market's in here. Can't get too like I'm ready to do too much. I'm watching it. Yeah, remember, once you're managing your risk, you can afford to sit around here and watch these trades pan out. You can afford to say, you know what, let me take a little shot at it. Once you've seen what you need to see and see what gone and watch it pan out. Yeah, like right here, we're coming up to a premium of this little box. Is the market going to start breaking structure here and pushing down? If it is, it's going to be very, very small to get in tiny. Yeah, someone's out there, I'm just going to take a punt. You could just take a punt, but then you're taking punts. You're a punter. Yeah. Alternatively, you could say, you know what, Jay, I'm sitting in my 5-minute time frame. There actually is some 5-minute structure that's been made. Here, I'm waiting for an indication, correction, continuation, and then I'll take a trade with my stop all the way above these swing highs on the basis that I'm in a bit of a premium and I could at least get down to a discount of that little range here. Who knows? Maybe it happens so quickly that you completely overshoot this bottom end and you're like, okay, this is what I was looking for. So therefore, this becomes an indication. You're expecting to see a correction. Therefore, your profits go backwards. But then hopefully, you're expecting to see a lower low. And there you have it, guys. That's my opinions. And at the moment, like I said to you, that GU is doing what it wants to do. But my money's still in my pocket. You haven't heard me tell me say, yes, guys, I'm getting in. You should get in. Anything like that. I said that right now, this market is here. And like I said, we have to think to ourselves as well. Is there some sort of catalyst? Wednesday, we're going to have new home sales. We've got some other stuff happening, AUD, Euro stuff. Obviously, we've got some other news. And I try not to go too mad with the news because there's news every day. It's read for the news every day.
Grand Rising, bro. Sorry to interrupt you. Just to let you know that the market's on tenterhooks. They are waiting for a number of news items, i.e. Friday, the PCE. However, NVIDIA is in bear territory. They think the bull runs over. That's the analysis that is coming from these Bloombergs and co.
Let me quickly stop you there and just hold your thought. You guys can remember when we broke down NVIDIA, right? And I said to you, NVIDIA's a great stock. I said it. I think the video, I don't know what day it was. He's like, it's great, but would I be investing in it right now when it's at the top of a range? And you heard me say, no, I wouldn't. You heard me say, I feel like this might have been the analysis that we had in there before. You heard me say that maybe I'd set a price that I'd be interested at in a discount, but I'm not going to be buying NVIDIA. I don't care what everybody else has been doing and how much money everybody else has been making. I cannot buy NVIDIA at the most expensive it's ever been. Doesn't make sense. When there's other things to invest in. So, sorry, just thought I'd say that. And you can see why. Just based upon what you've learned and you understand how to analyze the markets. In fact, I can draw these lines better. These lines are not drawn very well. Yeah. You can see why that's the case. Because within the range that NVIDIA has been trading within, we're at the top of that range, which is a premium. And we understand that these markets, we heard one of the podcasters say the other day, he goes, look, what's your strategy? He goes, I just trade from discount to premium to discount. So he said. So we understand that. So yeah, go on. Sorry, I'll carry on. NVIDIA's in the bear run.
Yeah, it's in bear territory. Basically, what was powering the markets were the 7 US 100 stocks, the IT stocks. They were powering the market upwards. However, now there's a bit of a bear run at the moment with some of these, so investors are a bit on shaky feet, shaky ground. They're thinking, not sure, so hence the wait. You might see a bit of a sell-off, but that is why the market is doing what it's doing at the moment. Also, yes, I put it in the group yesterday. The Bank of Japan are gonna be doing their putting money into their currency to prop up their currency. As you can see, there was wicks yesterday. There's some massive wicks today. There's going to be a lot of whipsawing going on. So just be careful, as Jay did mention. Just be careful if you're in any JPY pairs. I think the Japanese are fed up with their currency being so weak. So they're going to put more money. They're going to put billions of dollars of yen to prop up their currency. So just be aware. But yeah, there's Canada news today, but I think investors are waiting for some sentimental stuff that's going on. There's a lot of things going on, and it's all glued together. However, you just need to just be very careful on the markets this week. Any questions, anybody?
Yeah, I think so. So I think we're going to have a quick look before we finish. We're going to look at another indice and maybe you guys have never traded before, but it's the Nikkei. All right, it's the Nikkei, which is the Japanese index, okay? And let me just try and get some sort of outlook for it. All right, so I'm going to get rid of all of these news things, guys, because it's just sending me mad seeing it. All right, so I'll go to settings. I turn off economic events. Guys, remember, these are your tools. TradingView is your tool. Do have a play around with it. There shouldn't be a button on TradingView that you don't know what it does. Let me say that again to somebody. There shouldn't be a button that you don't know what it does. Is there a button in your car that you don't know what it does? Is there some button that you just don't have a clue? You've owned your car for 2, 3, 4, 5 years. There's a button that you just don't know what it does. Unlikely. It's unlikely there's a button in your car you just don't know what it does. Because when you get in that car, you pressed everything. Oh, what does this do? Ooh, what does this do? What does that do? Why? Because it's your car. You should know. Okay? And same thing with this trading view. All right? Don't let there be buttons that you don't know what they do. Click through these. Have a look. These, click through them. Whoops. Your notifications. Click through them. The chat. Click through them. My ideas. Hot list. The window. Click through everything. Yeah. Find out what they do. So this is a Nikkei. Nikkei's been bullish. All right. Why has it been bullish? Can anyone tell me why the Japanese 225, these companies have just been going up and up and up? Has anyone got an idea of maybe why?
Because the yen's been weak.
Yeah, I think so. Let's pull up the yen. JXY, which is the Japanese yen currency index. Have a look. Look. The yen's been going to hell, meaning that your £100 works harder or makes you feel richer or is more powerful, has more buying power in Japan and from Japanese goods and services. That's what it means. Okay. And that's why this JPN 225 has just been going to space. It's been going up and 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 up. All right. So let's go and have a look at it. We've got some lines in here at the moment, and I'm going to zoom in a bit onto the daily. So this is the index. You like US 30? This is the Japanese version. All right. Once again, you're going to have to make sure you understand lot sizing and what your contract size is for it. But I've told you how you do that. You go in very small first, and you see what a small entry will do. And if you're 10 times too small, you know that you can change it so that you're correct, or you understand what it is. Yeah. So look, we can see how this market's been trading up within, some range. It's for us to pull this one out first and understand when I'm drawing it, what data points I'm taking. For that first line there, let me make it a color, pink. The data point I'm taking is this and this. I put one on the top, like so. That'd be the top end of that range, taking into consideration that little pink top there, that little point there. But within that pink range, we've seen some lows touching, and let me make it a different color. This and this, like so. Okay, taking into those data points over here, and we're in that range here. So as we've come and tapped this middle of the range here, pink, maybe we're trying to get back down to the bottom of this pink range. See? Maybe. Yeah, my concern is this bigger range here. I don't know how good I drew it, but this bigger range between this yellow line and this yellow line, the issue is, we're kind of in no man's land at the moment, in the middle of that yellow range. That's my concern. All right, let's zoom in some more, see what's been happening. Well, this market, a bit like US 30, broke some structure from up here. Boom. Yeah, destroying some structure. And then we've had a retracement back in here. Let's have a look at it on the Fibonacci, this whole impulse from here all the way down to here, where we're kind of at that 50% 618 area, where the market has been kind of just in here, a mess. All right. Now on a smaller time frame, going to my hour, well, if you was buying in a discount, selling in a premium, you may have done okay, but not without holding your wee-wee, as the market was very volatile, down, up, bound. You got to your destination, up, down, heart in your mouth, up again, down, heart in your mouth, up again, boom, you got to your destination. Same thing as this market's pushing down here. But here we've got ever so slight, this is a higher low over here. What does this mean? Does this mean that the market it's got more energy to push up higher? Maybe grab some of the liquidity sitting above this box? Maybe some sort of spike doing this first before it decides to maybe do something else? Who knows? Who knows? Yeah. Maybe have a look at that blue range. That market is actually just going to be mucking about, ramping. And despite Japanese saying they're going to do XYZ, maybe we keep trading and pushing back up into this level of this blue range. Who knows? Is it going to be the pink range that's taken precedence, meaning that we've already tapped the top of the pink range and we're trying to get down to the bottom? If you believe that the intervention is going to do that and Japanese yen is going to gain some strength, maybe these Japanese 225 companies become less attractive and we start doing this. If not, maybe it's this blue range that takes precedent and we're at the bottom of this blue range and this market is actually going to keep doing this and it doesn't give a damn. All right. My gut is going with we might see this occur. Yeah, as if we're saying there's going to be an intervention to do something. But it was said before that it was going to do something and nothing really happened. The market just resumed the norm. It's got back to what it was doing, which was just pushing up and up and up and up and up against the Japanese yen. But this is the story that's been told. And at the moment, we're dancing in an area whereby a battle or an argument is waging. Yeah, there's a big battle being waged here of are we going up or are we going down? We're going up and we're going down and we're going up and we're going down. I mean, what are we doing? We're at the 50% level of this impulse now or never, homie. So someone might say, you know what, we're going down. But before we go down, let's get some provisions. Nam, 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 and then let's go. So if you do see a wick, especially if it's quite fast, pushing above this area, maybe look for some entries if it breaks some structure on a smaller time frame. It will be on a small time frame. That you might get a great entry up here as this market decides to tumble past 50% of the consolidation, tumble towards this pink line. All right. If not, and this market indicates, corrects, and continues, maybe it's still respecting this blue range and it wants to continue pushing up some more. It doesn't give a damn about what everybody else is saying. That's my analysis. I'm sorry that I'm not just saying this is what I'm doing, because that's not how I trade. I have my outlook. If it does this, I'm doing this. If it does that, I'm doing that. That's how I trade. All right. I would like, if you want me to say what my bias is, I'd prefer this market's made a lower low, lower high, and it wants to come down here. Because even on a Wyckoff, this would be an A, B, C retracement. And then the market might continue again to 1, 2, 3, 4, 5, back up towards the pink lines. The pink line. Yeah. So I'd like to see it do this and push down and get a great entry here and watch this go to hell on a JPN 225. All right. Guys, good, amazing day. All right. Nobody ain't dead. Nobody ain't mourning nothing. All right. I'm going to play something which is all right. So there's two things we can play. One is I'll show you the picture so you can make a decision based upon what it looks like if you're able to stay in the call. If you're not, have an absolutely amazing day. For those of you who are watching on YouTube, do like and subscribe. Lots of content I deliver, lots of value, lots of source. All right.